I would say that flows will continue to go into India. So since COVID, we've seen a large shift in private equity flows in general going into China, mainly because the country was shut down for much longer than most had expected, and therefore different manufacturing routes, different lines of business had to be created in places like Vietnam, India, Japan, so on and so forth. That also caught investor eyes. So investors are now looking at, again, places like India as somewhat of a replacement to China. Now, there's a lot of exciting things going on when it comes to India and the digitalization of the economy. As you know, in 2015, the Digital India project was kicked off by the government, and that really pushed forward a whole flow of projects that were geared towards innovation. And whenever that happens, whenever you have a regime shift like that that's supported by the government, obviously private equity takes notice.
Brilliant. You preempted my next question, Patrick, perfectly. And just help us understand how those digital India government initiatives like UPI, Unified Payments Interface, DigiLocker, e-hospitals are creating opportunities for private equity in growth areas from infrastructure to cybersecurity and financial services.
Great question. So UPI is 83% of the payments within India now, the digital payments on that platform. Mobile payments in general has gone up 43% just last year alone, year-over-year growth. As far as cloud-based growth goes, it's projected to grow at 25% year over year. So when you have organic growth taking place like that within the economy, private equity can come in and partner with a lot of the government firms to help facilitate that growth. And by facilitating that growth, profit from it as well.
One of our guests yesterday, Samir Kapadia, was talking about Prime Minister Modi's Triple Crown moment. And let's bring it back to the trade picture and trade deals that India is pursuing, whether it's with the UK, Europe or the United States. Does it follow that this momentum, if it does become material, translates into even larger private equity transactions in the Indian market over time, whether it's fintech, green tech, e-commerce or education? What are the sectors, Patrick, that you think will be in demand as a result of this?
Yeah, great question, Sri. So we think financial services, as I just hit on with mobile payments, will be very big. Cloud, believe it or not, will still be very big because the infrastructure around cloud needs to be built out. So this initiative, Digital India, was launched in 2015. Think of the U.S. from 2010 to 2020 and the explosion in growth that happened because of mobile, because of cloud. That's what India is in the thick of right now. So many would argue that we're going from more of an emerging economy to a developed economy. And during that transition, a tremendous amount of money can be made. You have players in there like Blackstone, Warburg Pincus, KKR. Some of the biggest on the planet are now taking notice to Indian markets. I think beforehand, the reason why you didn't have large players in that space are for a few different reasons. One, the currency depreciation over a long period of time was just too much of a risk. Inflation as well. So when you look at the period from 2005 up to 2015, the currency had depreciated, I think it was around 50% to the dollar. Very tough to make an investment in that environment and not accept or not think you're accepting a large degree of currency risk. Fast forward to today, the currency has stabilized, inflation has stabilized. A lot of it has to do with these initiatives. But what that does is create a playing field for private equity where you feel good about making an investment today and knowing, hey, 4 or 5 years out when I exit, I have a really good idea of what that playing field is going to look like based on projections.